Welcome to Momentum Monday. Today is May 26, 2025. Howard, did you enjoy your Japan trip?
Yeah, have you been?
Never been to Japan, but it's on my list.
How about I get back from Japan and go to the beach and run into you? What are the odds?
Yeah, I mean, I don't know.
Baby's beautiful.
Yeah, thank you.
You having fun with the baby?
Yeah, I am. I am having fun.
All right. Well, it's good to run into you guys. I just had to get it's a long flight, but man, what an interesting culture. I think I saw two Porsche, two Mercedes, two Teslas, and about a billion Toyotas and Lexuses. So it's really Japan's really interesting in that it's very old, but also very modern. And they live much differently than us and have been in what, a bear market for most of the last 30 years and seem to be doing fine.
Yeah, it seems like it. I guess they're not just invested that much in the Japanese market.
Now, they have a different way of life, but the markets look good there, huh? So other than rates exploded there, this
Yeah, they're starting to perk up, and they're starting
that
to
looks
get
amazing. Japan's ETF looks amazing. Wow, that is like a 30-year breakout.
basically I think near all-time highs. Yeah.
I wonder if that's related to the dollar. But all right, let you take us through the markets here.
I mean, we continue to see a recovery in the past couple months as it becomes clear that there will be some trade deals done with any country, really. I mean, probably tariffs are here to stay. They're not going to be zero, they're going to be 10% at least, but they're here to stay, and the market is focused on other factors, really, as it seems that it doesn't matter where the government comes from. Their own they are all trying to run huge deficit, huge fiscal spending deficit, which and they're all trying to depreciate the US dollar and at some point probably also monetize the US debt. And this is why I guess it's not such a huge surprise that despite all the scary tariff news, the dips are getting bought as probably the market is looking further ahead and seeing that if the dollar is depreciating and if they're trying to monetize US debt to keep rates lower, which they haven't done yet, but probably they will. You have to own assets, hard assets, or stocks of companies that are growing. So the dips are getting bought, and there's some industries that are starting to stand out in terms of relative strength. Uh, Last week was all about nuclear, as it seems the new government is trying to give priority to this energy source. So anything nuclear related is really on fire. Breaking out here, we have Centrus Energy LEU. I think they're the only company in the US that is enriching uranium and is providing it to the nuclear power plants, but also the smaller speculative ones that have created smaller nuclear reactors like SMR. I think this is close to all-time highs. OKLO, big volume breakout on Friday. NNE. Um, and I mean, if you pull up just the uranium ETF, you can see that huge volume, like the biggest volume for in a while, breakouts. And obviously, we have some slower moving companies that are doing the infrastructure around nuclear, like Fluor, also starting to perk up.
Yeah, none of these have followers on social media, so it's still probably. I mean, what people need to realize, even if there's pro-government, in 4 years you could have a change of government, and so it's hard to trade these other than to trade them, right? You got to use. They're not trend stocks in the sense that
I mean,
there's
companies like,
there's a limit to how fast they can deploy any of this stuff,
yeah,
even with a favorable government.
yeah, for example, companies like Aqua,
But
uh,
they're going to
they,
trade. But they're going to trade like
it's like a biotech stocks. They haven't made really any sales yet. Maybe they will in the future, but market is, trading based on future expectations and speculations.
So you have nuclear,
Anything really AI related to, obviously nuclear is related to AI in a way and related to robots. So anything AI is, I think it's recovering well. And being is actually one of the laggards, even though their technology is really fueling the whole AI trend. But anything else really like the
they
others,
report this week. They report this
yeah,
week.
they report on Wednesday after the close. Here we have Broadcom acting
Charts.
stronger. A lot of bull flags in the semiconductor space related to AI. This is a little bit more speculative one, but also recovering nicely. Um, Also the other energy plays, GEV, and I mean this one is already back to new all-time highs.
No, I'm looking for anything else that's interesting. The other ones that look interesting still are the Ubers and Dash, the degenerate economy stocks. Uber's all
Yeah,
time.
Uber had a breakout and now it pulled back to its rising 20. So if you want to get involved, this is not a bad spot, with some tight stop if you're a swing
Yeah.
trader.
To me, they're just trend stocks. DoorDash, another one of my degenerate economy. I didn't really follow the markets while I was gone, but this looks
Yeah,
very
it is setting
strong.
up, yeah.
Very strong. Not cheap, but again, about to take out all-time highs. And look at the obviously the operating leverage is great if they theoretically could do $4, go from negative $3 to positive $4 over 3 years. So we're seeing a lot of positive operating leverage. And that's kind of what you're looking for. It's not going to be cheap though, unless the market really sells off here. But these are ones to watch. But I'm not, other than my degenerate economy, I think the big story might be Apple last week, in that, OpenAI's Sam's acting like the Steve Jobs in many ways, right? Of AI, using his stock and his market cap to do acquisitions. He brought in Johnny Ive. And the biggest winner is going to be Microsoft of that, because they got, I don't know, 20-30% of the sales. So anytime OpenAI is in the news, you see the way Microsoft just kind of rallied back to all-time highs.
Yeah.
So I don't know how else you play OpenAI, but Michael Parekh was talking about, a lot of people were talking about maybe Apple just has to buy OpenAI for half a trillion dollars. Um, but Apple by far not the largest cap company anymore. And and technically a mess.
I mean, Microsoft is right
Like,
now the biggest, and if Microsoft is owning, no,
and Meta's pretty close to taking over Apple as well, I think.
uh, not really. It's like
No?
1.6 billion, and Apple is 2.9. So not really. It's just Apple and Microsoft really, and
Okay.
Nvidia.
Where's NVIDIA at?
Nvidia's number two, 3.2.
Wow. Wow. All right. So big earnings from them this week. Anything else? I don't see anything else that's standing out other than rates, right? Like I don't, mortgage rates
Yeah,
7%.
rates are perking up, and it seems like the market expects higher inflation. It might not happen, it might happen, but even the federal officials in their interviews are saying that the tariff policy might bring stagflation, lower growth, and higher inflation. And they're probably not going to really make any moves, not going to cut rates before September, before they have more clarity
But even if
of,
they cut rates up, and every Trumpster, everybody who flipped to Trump in Silicon Valley, thanks to spending, you're all about austerity while they were trying to get Trump elected. And then Trump comes in and just the bill he sent through the House is a comedy of spending. So
yeah.
so again, rates in the dollar,
This is
right?
the big picture, yes.
Big
Basically,
picture,
it
the
seems like they
macro.
want to depreciate the US dollar significantly. So, because if you depreciate it by 20%, that's like a 20% tariffs on everybody.
Right,
Um,
but if they depreciate and rates go up, Ivan, and you have a massive slowdown, and you can't grow yourself out of this. So if we look at the small caps, right? So you're taking some of the fangs out of this, Trump, and now he's throwing tariffs at the EU and at Apple. You're helping. the Europe defense industry. Again, we're stock pickers, so we don't care. But I'm saying if you really care, and I have kids, and you now have a 1-year-old, what is it going to look like? I was going through with my wife. We paid 160,000. I thought we were overpaying in the late 80s for our first home. That home is probably 1 million, almost 2 million. That same house probably about 2 million bucks today. So we paid 160 30 years ago. Probably had to put down 30 grand, carry 100 grand note at 7% or 6.5%. Right. So now that same, you'd have to put down 400. So you have to put down 10 times as much, and you would have to have 1.6 million mortgage instead of 100,000. So you'd have to put 10 times as much and have a 15 times size mortgage in about 30 years. So it's almost exponential at this point, the cost of owning your first house. Right. So we were at the low end of a
So
Phoenix
you
house.
said late 80s?
What's that?
When did you buy it? Late 80s, you
As
said?
we got married, yeah. So late 80s.
Yeah, we can
Uh,
even go back
no,
that.
no, no. Sorry. Late 90s, Ivan. I'm sorry. So much less
All
stuff. So
right,
we
late 90s. So the S&P 111, what is it today? Let me see.
the five
Six
bagger.
times. So
Yeah.
yeah, so the house went up a lot more than,
So the house went up a lot more.
not a
So
lot more,
the
but more than the S&P. Yeah.
more than the S&P rates of, now back to where they were the same. So you're looking at 10 times the deposit for the house and 15 times the amount of the mortgage. So it's these are the things on a macro sense that matter. Now, again, well, kids, they have an iPhone and they don't have to, and everything costs less, right? Within the house, because, a TV costs a few $100. And, furniture you can get really cheap and you don't need as much, stuff. But at the same time, it doesn't matter at some point what the S&P is doing if young people can't get ahead. So this is all going to come down to parents handing down this money. And, but really, if you look, you got to follow the dollar and rates right here because these are the big, something historically they're going to bounce right about here. You would think so. I wouldn't.
Well, maybe the US will become the next Japan in a way, as you know, the Japanese government has been buying their own government bonds so they can suppress rates for like what for more than 30 years now.
Yeah.
So that's why I'm thinking that inevitably we're heading in that direction, especially with that huge fiscal deficit that we're all running we're not, the economy is not even in a recession. And
Well,
but
that real estate prices come way, way down.
yeah, but it is what it is. We're here to trade the market. Like we
Yeah, yeah,
cannot
yeah.
change the macro environment. We can just comment on it.
Yeah.
Uh,
I would say just be careful this week. I think a lot of stocks trading below their 200-day moving average. You've got a lot of screaming. You've got Trump screaming at Putin. You have retail still a mess. Um, you have the EU kind of war with the United States, although they've said to put it on delay. But really, no matter what they do to the dollar, rates are pretty higher. But Nvidia Wednesday. Everybody have a great week. It's good to be back, Ivan.
all right, Howard.
Yeah, have a
Thank
good
you.
week. See you,
You,
everybody.
bye.